Exercise 1115 gives us some selected information from an income statement and a balance sheet and says, based on these numbers and just these numbers, using the direct method, calculate cash received from customers and cash paid to suppliers. So let's take a look at this. Our net sales was $91,758 million. That's what they tell us. All these answers are in millions. Our accounts receivable went up $1,733 million. So our accounts receivable went up. That means in here there's $1,733 million worth of sales for which we did not collect cash. That's the definition of accounts receivable. So our cash received from customers is $90,025 million. The next thing it asks us to do is to compute the cash paid for suppliers. Now remember, this is the cost of goods sold minus the beginning inventory because we paid that last year, plus the ending inventory because we paid that this year. So we have our cost of goods sold of $69,278 million. Our inventory increased $883 million. So our ending inventory is greater than our beginning inventory by $883 million. So our total purchases had to be the sum of those, $70,161 million. Now, our accounts payable is $1,967 million more than it was. So in those purchases, we took credit for these payments, but we haven't made them yet. Therefore, our cash will be going up. So we add that. And when we add that, we come back with cash of $72,128 million. Now, on the exam, on the quiz, if they ask you to answer in millions, that's the correct way to answer it. Okay, if you add those 3 extra zeros, the answer is incorrect.